Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here for a Forex market weekly analysis for February 8th through the 12th. And before we get into that, real quick, we want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And real quickly, also want to remind you to, if you have not already subscribed to our YouTube channel, Forex Trading Unlocked, please do so you'll know when our new videos and lessons are coming out, and when we are broadcasting live as well, like we are right now currently. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. We will have some of those signals in our analysis today. So we have the Forex-Trading-Unlocked.com website pulled up, and we already have pulled up our workstation page, which you can access from the navigation bar by going to this market analysis and education, and then you can access that link. So we're going to skip past the numbers for the week and get right to our chart. So we already have pulled up a Dixie dollar index chart to see how things ended the week last week. So Friday was a big sell-off in the dollar. However, the market has been making higher move highs and higher move lows, so I'm looking at Friday as more of a corrective profit-taking day. There was a big move in the euro, and you'll see that as we get into the analysis. So it was really only a few currencies that really generated this big move in the dollar index. I would say it's a short-term reversal. Remember that the overall trend for the dollar index in the long-term and medium term is bearish. However, the short-term daily and hourly is bullish. So I'm looking at this as just a first corrective phase. Now, we already hit our upside target on Thursday, the first target range, and now this I'm viewing as a pullback because we broke the long-term trend with this downward sloping resistance line. This upside target area is now our extended upside target area, because we had already hit our initial one on Thursday and actually poked all the way near the top of it. So now we're raising this range because we have this long-term trend that was broken last week. We now have a new upward sloping line that is going to be our support base for the short-term trend. Now we are looking at this as still a corrective move higher. So we're short-term a bear, looking to see how the dollar reacts as we start the week. It's a little on edge, and I expect it to be so for probably into the trading of tomorrow, and then I would expect that we still get another rally and a pop up to here. As we get into the analysis for today, you'll see why we're coming up with that. So we are just looking at the short-term little slide in the dollar as just that. Now here's the euro. The euro has been in a nice aggressive bull pattern versus the dollar. This is the biggest weight in the dollar index, so this is like a little reversal. There was not a sell signal in the dollar index. It was a reversal day without a doubt, but it was not a sell signal. Whereas we have the euro-US dollar that did produce a high probable Japanese candlestick pattern, which you can read about how to trade that signal in the book I mentioned earlier. And that was our Friday signal. And as you can see today, it is slightly higher. It pulled back a little bit and gave some aggressive bulls a chance to get long, but as you can see, it's not really pushing very much. Now, the U.S. stock market has just opened. We will get into Bitcoin. Obviously, those who are watching the markets today know that Bitcoin had a monstrous rally. That has a little something to do with what's going on with the currencies. Not that Bitcoin makes the currency markets move. However, when people are pulling cash out of the market, it's coming from somewhere. So they're either using cash or selling equities and other derivatives to purchase. And we'll even get into that because now we have funds. And the CME just listed another cryptocurrency on their exchange, which by the way, there is huge margins to try and trade the cryptocurrencies with the futures through the CME. But we'll get into that as we progress through this analysis. So the euro-US dollar has a short-term buy signal that is now targeting this $1.2149 to $1.2198 upside target zone. Should we breach this downward sloping resistance line, which is holding the short-term corrective trend lower intact, I think we will have a good chance at definitely hitting this area. Now, it's going to get dicey above here because should we take out $1.2198, then that really puts us back on the bullish path for the euro-US dollar. So that would have us very bearish in the dollar index then, should we get a rally up past this $1.2198 area. So we'll be watching that over the next few sessions. Like I said, this right now is our upside target zone. We're viewing it as a correction. The dollar is in an upside correction right now, and we're looking at a little short-term profit-taking move to the downside against the dollar for the next couple sessions, and that would give this euro a good chance at popping up. As you can see, since we're talking right now, it actually just lifted just slightly a little higher. They must be listening to me. So we'll see how it gets above this line or does not get above this line over today's and tomorrow's trading session. By attrition over the next couple days, we will get through this. So that still puts this into play. I think you're going to have a lot of resistance at this $21.49, and if it spikes underneath here, because you can see this last high here, that's right below this $21.98. If we take that out, that's a higher move high after a lower move low. That would put us on the neutral campaign. So we could go into a big sideways chop with the dollar index actually for the next couple months. Remember, elections are over. Now we have all kinds of executive orders that are coming into play. So we have to see what kind of ramifications these things are going to touch off in the market. Now, and we still have the coronavirus on the table, but everything's opening up. Globally, everyone's resisting now, and except for in the UK and a certain few other countries like Canada and Australia, the hammer isn't really coming down on the people who are resisting. So we'll see what happens if these things open up and we don't have another monster wave like they had supposedly this past year. When you look at the numbers, you're still looking at, they just crossed 420-some thousand in the U.S. You're still looking at less than 0.5% of the population. So that's we have more suicides and things like that. So it's, I don't know, we'll figure it out later, I guess. But the British pound US dollar is slightly higher also, which is helping to lift the dollar index above $1.3760. This market remains a bull. Now, this is the tough part about the pound. It really needs to take out this $1.3567 area to the downside to set new move lows to confirm at least a short-term bearish correction. This market has been a raging bull no matter what for months, weeks, days, into the hourly trade. This is an aggressive bull. So we've had a sell signal here where our pivot point is to the upside. This happens to be a dark cloud cover, which is a high probable Japanese candlestick pattern as well. Let's see, I gotta get this over here. I gotta get this. Okay, so this day right here, this was a dark cloud cover. Oops, not Cyril, sell signal. So far, no questions on the chat. You guys are quiet today. You guys must be really interested in what I'm saying. Or maybe not. I don't know. So anyhow, we had the sell signal. We came down to this low that we set last Thursday, and now we have rallied since then. See how the pound was up on Friday, just like the euro was against the dollar? That's why you had such a big move in the dollar index. Notice how this is stalling. One of the big things we have to watch with the pound is the price of oil and a couple other commodities. As long as this bull market is existing in the CRB index, and especially in the fuel sector such as gas and oil, I believe that's going to be lifting the pound, just like it supports the Canada and a couple other currencies versus the dollar. It's a commodity-driven trade. We're going to get into the interest rate factor too. That's going to really make things a little bit snappy with this. But let's clear through this. Unless we get above $1.3760, this market is sideways to lower. We are looking for a test of support again here down at $1.3567. I would watch oil. Should we get a big correction in oil, say maybe a $4 or $5 correction, maybe even or more, which I do not see coming in the short run, that would probably help to create a sell-off in the pound. Even if the dollar is a raging bull, the pound is very strong right now because of that. So I would be very leery and use caution as a seller, just as I would be very cautious buying at these highs. It's kind of running out of gas. Now, if we get another accelerated move higher in oil, then I would probably say that if you're short this market, you're going to get squeezed, and the longs will drive this market above this $1.3760, probably all the way up to $1.39 even. So we'll see how that pans out. One thing that is restricting things in showing some relief is the fact that the Swiss had a major breakout. It's hit target areas that it's kind of hard on the daily to see, so we're going to look at the weekly. On a weekly basis, we are targeting up to this 93.37 area, up to 94.69. This downward sloping resistance line on the weekly chart for the U.S. dollar Swiss is containing the long-term bearish trend. Right now, we are looking at this as an upside correction with the Swiss, just like we're looking with the dollar index as an upside correction. We had hit earlier on the daily the numbers for the U.S. dollar Swiss last week. With this high on Thursday, it blew through them, and now we're kind of waiting for a reaction here. It's most likely going to digest the next couple days. That's why you can see on Friday there was that big sell-off. So I'd key off of that pivot above Friday's high. We are bullish, looking for an extended move higher into a more bigger, higher zone that we looked at on the weekly chart. Otherwise, we're looking for a little bit of a consolidation in the short run as the euro and the pound. So as you can see, the Swiss was actually higher, much higher today. Now it's on its lows. That's because the pound and the euro are pushing their highs right now of the day, but they're not that excessive either. So that's why I would view Friday's move as more of a profit-taking correction that will probably be pressed into today or maybe even into tomorrow before we start to see a turn once again to the upside. We have a lot of divergence in currencies, so the dollar index as a whole is hard to gauge a lot of them. But the pound and the euro especially, is one that is driving that trend. What we did have here is an upside breakout. We had a head and shoulders pattern. Here's the shoulder, here's the head, here's the shoulder for the U.S. dollar Swiss. That confirms a big bullish breakout. We had a buy signal besides that came into yesterday or Friday's trade, or Thursday's, and then reversed on Friday. So we hit the short-term targets, but the longer-term targets, like I said, because of this head and shoulder bottom, it's going to take probably a few months to reach those targets. I would not think that it's going to happen anytime soon, but probably as we get into March and into April, we could hit those up more higher price points for the U.S. dollar Swiss. All right, now let's jump around to the U.S. dollar JPY. All right, Japanese yen also hit our target, short-term targets last week, and now is correcting off them. As you can see, the dollar's got a little strength here. We're going to take a look at the weekly chart on this one to give you some points. $107.11 up to 108.20 is our upside target range. That would take out this downward sloping resistance line that's holding the short-term trend intact. This market is an overall bear. You can see this other downward sloping resistance line here. We would have to take that out and get above this target zone to become an aggressive bull for this market. But it is having a nice correction versus the dollar. And I think you're going to see dollar strength also continue against the yen for probably the next couple months. So we may have a little divergence where the pound may be neutral, probably most likely, or a little bit stronger versus the dollar, maybe even making higher move highs, while the Swiss may be kind of neutral in a grind, making lower move lows, meaning higher move highs with the dollar versus the Swiss. And the euro could be a chop fest. We'll see what happens. But right now, the euro is probably going to lose a lot of steam because of what's going on. You have the revolts now in Italy, all the businesses that are basically saying, okay, well, we're all opening up and we don't care anymore. Their government has collapsed. Their country is completely broke. Their people they have to open up. They have no other way. They have to start doing things because there's no bailout for them. So before people start starving, they're going to do what they have to do for themselves. And that momentum is growing throughout Europe, so I would assume you're going to see a lot of unrest. It continues in the EU. Remember, the UK, because of Brexit, is no longer part of it, so they don't have to flip the bill. Germany will have to, and that's going to weigh on them. So right now in the US, for the Japanese yen, we're looking for a little digestive phase the next couple of days. Once we get a price point, we'll figure it out. Now, this has been a very steep rally on the daily basis here. So if you look at this trend here, from here to here, you could see it's sliding maybe back down into this area, and then we'll see what happens. We would have to fall all the way back down here below this 103 to 103.5 area before we start to get bearish. So that would be a big correction. That if that happens, well, then we know we're back on the long-term bear. Remember, this is a long-term bear, monthly, weekly, but now on the daily, the U.S. and hourly, the U.S. dollar, Japanese yen is looking to become a bull. So this one is another currency where in the dollar index, which just doesn't, the yen has a heavy weight, will start to help to keep the dollar index positive and keep it from becoming such a bear. So remember, like I said, that is going to be a hard gauge. We have divergence now in the currencies. Coronavirus trade is off the table. We're getting back to trade zones and free market movement again, I think, hopefully. Australian dollar, US dollar is continuing to aggressively be a bull on the short-term basis against the dollar. However, we've been making lower move lows and lower move highs. We are viewing this current rally in the Australian dollar, US dollar, as only a correction. We would have to take out this downward sloping resistance line and then also this 0.7767 pivot point to confirm a neutral to higher trade. Now this market, Australian dollar, US dollar, in the monthly and weekly is definitely a bull. This is being viewed as a short-term daily hourly correction phase that we entered at the beginning of January. And right now we are on the hourly obviously bullish, and on the daily we just came off a lower move low after a lower move high. That means the trend is still lower. So we are an aggressive sell rally forecast. This could have been the base and starting another wave higher. Who knows? We'll see what happens. But like I said, right now we are looking for this downside target area to be reached over the next month and a half. But we still have to run out of gas and take out this level here at 75.65 first. That would confirm new lows and really put the downside target area in our sights. So we'll see what happens. But because the dollar seems to be having a little bit of a reprieve, and we'll get more into that as to why we think the dollar will have a short-term little bit of a hit today into tomorrow, but it's only that's going to run out of gas and come back in the dollar's favor. So we're building it up for this, and we're going to get to it in just after we get a couple more currencies. So U.S. dollar, Mexican peso has entered a neutral zone. It's basically going to be hovering, I think, between this 19.54 and 20.59 range for a while. A violation of either level would cause the market to break out and confirm a new trend, but right now we're looking at it basing and going sideways for a while. We'll see what happens if the spring break trade comes in. It's kind of funny, everything's opening up, and then also they're saying everything's getting worse, so we'll see if spring break travel starts to really happen or not. That's going to be a very big thing for them, as well as to see how now I guess Biden's going to overturn the NAFTA agreement that was just negotiated a couple years ago that was better for America. I think it was everyone agreed on both sides. It corrected a lot of bad things, and now I guess that's going to be reversed again. So we'll see. U.S. dollar, Canada. The U.S. dollar, Canada, this is also like the British pound. Because of oil, it's going to be hard for the Canadian dollar to become a bear and the dollar to be a bull versus it. And now we did set a nice bottom here. We had a nice rally. We hit our target points short term. We did breach the slope of this downtrend. Has been so severe on the U.S. dollar, Canada, and it's been very, very long. This downward sloping line goes all the way back to a year ago. So now we did breach that, and that could be just by attrition, but we are coming off a little rounding low here. Our key pivot here is right here to $27.37. We'll have to watch it. If we continue to take this out, if we hit support more today and we do fall below here, that would be a lower move low after a lower move high, which confirms that this is at least in a neutral to, continuing a bear trend. This may continue. We may see new lows down below $1.26 within the next few weeks, maybe even the next week and a half. Like I said, if we have a big rally in oil, besides the pound getting a lift and then seeing that probably make new highs, you most likely will see the U.S. dollar, Canada make new lows. We did have this breach, like I said, this arrow here shows when we came out of the long-term trend, but as you can see, it's more sideways and choppy, so we don't have much to go on there. Let's go back to the euro U.S. dollar and see what we're doing. Yeah, they're still hovering, as you can see. Now let's take a look at what's going on with the 30-year Treasury bond. Interest rates are a function of currencies for pricing. Now the fact that the bonds really took a tank on Friday, now this is ironic. While the dollar was getting beaten down, the interest rates were rising in a big way, making lower move lows, meaning higher yields in the long-term end of the curve. We had this $1.70 and $1.68 as a big neutral zone, holding that sort of dollar could fluctuate and bounce around every which way. Above $1.70, it's hard for the dollar to be too much of a raging bull. However, below $1.68, it's hard to not be a bull on the dollar just because of the fact that market rates are dictating higher rates. It's a function of currency pricing. It doesn't matter what the banks, they can be lending at just above zero like they are. Or excuse me, the central banks and then the other banks, whatever, they're making their spread. But the market now is dictating no matter what, and it's impossible because we have to not have higher rates come into play now. We have inflation that's being forced by executive orders. We have oil that is now railing. This is being forced because of executive orders. A floor is now being put on the price of oil. So you have no matter what now, oil will not get below $30, $35 a barrel again for years unless they change their tune on what they're doing in the U.S. So that alone is going to drive inflation in all the other commodity markets because now you got to remember, heavy equipment, no matter what, it runs on gas. It doesn't run on electric. You can't run big cranes or mining equipment on electric power. It just doesn't work. Not to mention the cost of that would be just completely go against what you're trying to do. So that being said, you are going to see continued inflation in the CRB. If you're not into commodities, that doesn't matter. But for currency pricing, you should be aware of what's going on because it does impact them. Bitcoin had a monstrous breakout to the upside today, obviously, and we'll see how this thing goes. This is another thing. Is one of the reasons it probably is getting this rally is that the CME now launched the second cryptocurrency. That can be now hedged on a global exchange. The margins to trade these things are outrageous to hedge, so you need deep pockets. These are all whales. However, funds are now getting involved in the crypto space. This is a bad idea on many levels. Everyone that saw what happened to GameStop, fund managers are not traders. They're money managers. They're just used car salesmen who happen to trick a lot of people with a lot of deep pockets and big money into giving them money to manage. They get paid just for holding it. They don't have to do anything, and they're making money. Eventually, no matter what, they all blow up because they're not experienced. They do stupid things like go short GameStop without having a hedge. Ironic, hedge fund managers did not have hedges on positions with unlimited risk. Of course, what do they care? It's not their money. So what are they doing now? They're buying, because of these derivatives on them, funds are now having crypto funds and being allowed to invest in them. Universities have their big endowments now are buying into these. So big amounts of cash are coming out of their selling liquidable assets in the real markets and pouring cash into cryptocurrencies. So that's going to definitely weigh on the dollar and other currencies as well as far as liquidity, because now you are tying up major amounts of money into these, well, crypto assets, if you will. So it will not end well. It will not end well, especially for the fund managers and for the people actually who have their money in the funds. But a sucker and his money are parted easily. So remember, the interest rate curve equation is going to pressure the currencies. Most likely you're going to see this euro continue to pressure resistance over the next day and a half. We do have this short-term buy signal that comes up into this upside target zone. So will that happen over the next 2 days or 3 days? Probably not. We're not looking for an aggressive rally to happen, especially right now with the cryptocurrencies moving the way they are. Because here's another thing, too, is that if you want to look at how, if you go to our Forex-Trading-Unlocked.com website, you can always pan and check out these markets really quickly. Now let me show you something here. When you have the Forex markets here, this will pull all of your Forex crosses where you can just go to them. And if you go all the way to the bottom, you can go to the Bitcoin crosses. So just like we were looking at the Bitcoin versus the dollar, here's the Bitcoin versus the euro. Look at that. It's doing the same thing. It's rallying against all currencies, right? Okay, so that's why you're having cash and euros being pulled out and they're being converted to crypto assets, and whoever's selling these things now is hoarding these currencies. Okay, this is a big deal. So at these levels, because Bitcoin is not trading at 2,000 or 400 or whatever, $40,000 or plus a contract, that's a lot of equity at a time to be absorbed. And now you have big funds that are buying at these levels. So what does that mean? Where's their money coming from? They're not sitting on that much cash. They have to liquidate other things. So it's going to put a lot of strains on the markets. It's going to also cause some vacuums. I would expect to see a lot of swinging markets and probably a derivative meltdown that will most likely hit us within probably the next 7 to 12 months. Not anytime soon, but I would say it is lurking in the shadows in a big way, especially as the cryptocurrencies continue to press higher and fund managers start to get involved in this space. So anyhow, I want to thank you very much for your time. If you haven't already subscribed to our YouTube channel, please do, Forex Trading Unlocked, and check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And always come and check us out at forex-trading-unlocked.com for your Forex information and needs, and we will see you soon.